Hello and welcome to the Solve to Evolve podcast. The purpose of this podcast is to share our knowledge and insight to help individuals and business owners learn and grow. Hello and welcome solvers to the second episode of Solve to Evolve. My name is Phil. I'm here with my fellow solvers, Chris on my right and Jono on my left. And in today's episode, we're just going to really dive into the value of an advisor, tax accountant and a business advisor, and how they really add value in this space, or to clients really. So firstly, Chris, I just want to start with you. Can you specialize in helping, as a tax accountant, helping high net worth individuals? Can you explain to us how you do that and also define what is a high net worth individual?
Sure, thanks, Phil. It's not really just about high net worth individuals. They tend to end up being my clients because people with a bigger income tax problem tend to need more advice. But it applies to everyone. Everybody has, whether they're aware of it or not, everybody has a P&L and a balance sheet. And a balance sheet in particular is assets less liabilities gives a net number. Everybody has a number above their head.
Yeah, your net worth.
Your net worth. And really, with a tax return for me, it's important because it gives me a window into a client's financial life. But I don't stop there. I actually climb into the window. I climb into the house and try to understand the house. And then if it needs to be tidied up, I'll tell the client. If they want to renovate it to add on another room, I'll help them do that renovation. I'll help them finance the renovation. Maybe they want to move houses, in which case they might need to get a loan. So I'll assist them to do that. But I think to answer your question, how do you add value to a client? I think the core of it is really in helping them to understand their numbers.
Yep.
And a key way that I do that with my clients in my practice is to draw a group structure for them, for their family group, and then also to document in a very simple Excel spreadsheet kind of format what their consolidated, usually a husband and wife couple's consolidated net assets are. So they can see on a piece of paper or on an Excel spreadsheet what their assets are, what their liabilities are, and what their net number is for the family group. And then we can project as well. We can look forward and say, okay, that's where we are now. Where do you want to be?
What about self-managed super funds? I know you kind of specialize in that area as well. How do you, tell the viewers out there how you help the clients with self-managed super funds?
Sure. Well, to be honest, most of it is education. And most people don't understand the power of that entity in terms of generating tax efficient compounding and returns for a family group over time. It's very misunderstood. It's, even though it controls many hundreds of billions now worth of dollars of assets, the sector is still shrouded in a bit of mystery. And a big part of my job, Phil, is to help the client understand what a super fund is and how it can fit into their balance sheet and supercharge their after tax returns over time. Yep. So part of it is education, and part of it is also doing the actual nuts and bolts compliance and accounting work for the super fund, and organising audits and various other compliance activities year on year.
Yeah, I mean, over time for your clients with self-managed super funds, what do you see the benefits are for them?
The benefits for my typical client group, many of the individuals of whom are high income earners, is that they're going to be deriving income and paying tax on it at 15% instead of 47% or whatever the top marginal tax rate is at that point in time. So if they can understand the basics of, for example, dividend imputation, then I can explain to them concepts like tax arbitrage, and then they can start to understand. It's like a shield is kind of lifted from their eyes. They can see the power of a self-managed super fund over the years, and it doesn't only involve the matriarch and patriarch. You go one level down in the family group to the children as well.
Yep.
Self-managed super funds now can have up to 6 members. So if you have a family group with up to 4 children, they can invest with a wolf pack mentality.
Yep.
And it's not just the financial side of things, Phil. It's also handing down a philosophy to your kids and to the next generation that every time you go to Woolworths and buy a loaf of bread, if your super fund owns shares in Woolworths, for example, you can explain to them that the trading stock on the shelves actually belongs to you. So I think that over time, self-managed super funds will become the dominant form of super investment in this country. And I want to play a part in it, A, because I'm interested in it, but B, because, and really the core of it is that it benefits our clients. So we put our clients first. And
That's right. I think you touched on a couple of points. I think the first one is self-managed super funds tax rate is at 15%. And if you're at the top marginal rate, which is 47%, that's a huge saving over time. And the second one is imputation credits. I think we'll dive into that more in another episode, but I think those are really key points that clients should be aware of and understand. Jono, what about yourself? So you're a self-managed, not a self-managed, sorry, too much SMSF. Yeah, that's right. You're a small to medium enterprise tax accountant, but you also specialise in crypto. Mm-hmm. Why don't you tell us a little bit more about how you help your SME clients and the issues that they generally struggle with?
Yeah, for sure. So I like to focus on the small to medium businesses in Australia because they really drive the economy in Australia. They're a massive part of the economy and how families build wealth. You know, talking about handing down wealth to generations. You know, family business is a massive way to do that as well, apart from property. And all businesses will more or less start as a small business. So, you know, we hope to go on the journey with our clients from small to medium, maybe some even to large, if they get to that point. But in terms of the role of me as a tax accountant for SMEs, it's really to get to know the business inside out, get to know the client really well and build a relationship with them. Because once you do that, then you can really advise them in the best way. If you understand what they know and you're educating them along the way, you can point out things that are going to help them in business. And they also use me as a sounding board as well. You know, it starts off all about tax and accounting, but sometimes they'll ask about legal issues, other issues, commercial, and I can help refer them on to good people to help them with that. But also, I mean, there's a lot of, you know, we talk about the tax rules a lot, but a lot of the incentives that the government provide are to businesses. And, you know, that's really to incentivize businesses to grow. You know, that's not to say it's not without challenges, because once you become a business owner, you realize you're fighting wars on a lot of fronts when it comes to tax.
What would you say a SME owner should consider before engaging a tax accountant?
Yeah, they should really consider the accountant's experience. So have they worked with those sorts of clients before? Do they have the knowledge to advise that market? And my background is mostly in private clients. I did a short stint working for large international clients, but I see more value in the small to medium market. So you should definitely, when you're hiring an accountant, do they know that market? Are they experienced in it? And maybe even you would want to ask for reference checks. Take it seriously because you're hiring someone who's going to partner with you for a long time, hopefully. And they should also check that the accountant has capacity to service them. So how often do they want to be contacted? Maybe when you're starting up, it's not that much. It's on an ad hoc basis. As they grow, it starts to get a bit more and more. Make sure the accountant can service that need and that you're happy with the fees.
Yep.
As well.
No, that's a really, really good point. Why don't we also move along now and talk about crypto? So that's obviously new to the economy or to the world, really. A lot of changes have happened. Markets crash as well, actually. But why don't you tell us a bit about how you specialise as a crypto tax accountant and how you help your clients? Yeah,
sure. Well, a bit of background. I started getting into crypto last year, about midway through last year, at the point when you start hearing a lot about it, when the market was doing well. Things have changed now in end of 2022. So that is what it is. But, going on that personal journey, I had to do a lot of research, a lot of digging into the crypto rabbit hole, because there is, a massive amount to learn to make sure that you don't get caught out. And what I found was I started to help clients and my friends really who are in crypto, and they had no idea like where their portfolio was at. They had no idea about what the gains and losses they were making and tracking their cost base. Because once you get involved, there's a lot of exchanges and wallets that you use. So I started diving into software to help with that, both for myself and for the clients that I was helping. I found a couple of good software packages and used those to get good or better tax outcomes for them, because a lot of the times the software will market itself as, you just put your API or your data in and you get the reports out of it. But a lot of times it needs manual work and tax advice to support that. Phil, can you explain the difference between a business advisor and a tax accountant?
Yeah, so look, I'm an accountant at heart, but unlike you guys, I don't really like the tax work. And so look, really the difference is, think of a tax accountant as, retrospective. They look back, it's already been done. They fill forms for the previous year. I'm more of a business advisor, so I entrench myself within the business, a lot more proactive in terms of getting them to where they need to be. So, in my role as a business advisor, I'll generally work closely with the business owner, work out what their, dream outcome is and goal is, and then build a plan, short-term, medium, long-term plan to then be able to track towards that. Part of that as well is to, set KPIs or set targets so that we can measure it to make sure that those things are achieved on a month-to-month basis. Being able to produce your monthly reports, sitting down with the clients and really getting into the details and really holding them accountable. I think the biggest thing...
Would you say that's the core of how a business advisor adds value for a client group? Or are there other aspects to it apart from the planning?
Yeah, that's a good question, Chris. So I think part of the planning is it's a big thing. So, if you don't plan ahead, you don't know where you go. You're going to lose direction and you're just going to fluff about. I would see myself, your analogy of jumping into the window and looking around and trying to improve the household. I'd use something similar to that. And a business advisor is kind of like a builder, for example. So a business is a house, really. You want to make sure that business has a strong foundation, like the concrete slab, so that you can then build and erect a strong house. Put the roof on top. That's making sure in the business having the right systems in place, the processes, having basic thing, which is record keeping. If you've got strong accounting, then you'll have a strong business, right? So, being able to dive into that business, ensuring that the company or that business owner has a strong foundation to allow them and, facilitate growth. So ultimately that's my role as a business advisor. And I partner with them just to make sure that we hold them accountable, because ultimately business owners are, especially the small business owners, they're good at what they do, but a lot of them aren't accountants. They aren't. Sure. They don't have the financial background to be able to move in that direction. They're just good at selling, right? So that's my role. Good question. Thanks, Chris.
And that works well because when you're working with a tax accountant, you don't have to think about all the filing obligations. You're focusing more on that business operations and growth.
Yeah, it's just giving them that expertise on what they do. So I work with about, probably 80 plus businesses at this point in time. So I've seen quite a bit and how they work. And every business is different. And so I just love seeing and helping a client going from A to B. I hate filling out tax forms. I'll leave that to you guys.
Fair enough.
No, awesome. Thanks for that, guys. So look, viewers, thank you for today, joining us today. This is, it's been a great episode of really learning about the solvers and how we help our clients in our specific focus areas. Please join us for the next episode. Thank you. If you liked or loved what you heard from us today and want to get in contact with us, please email us at podcast@solveaccounting.com.au or head to our website and fill in the contact form. Thank you and see you next time.